Hello everybody, welcome back. So we're going to speculate as to where the lows will be and what sort of things to look for in order to find the lows. Not that I suggest anyone try to get clever and sort of buy, extreme lows or whatever, even though that's your call. You can do that if you want. Like I say, I'm prepared to sit this little portion of the market out, and for the record, this is what I did in the last bear market. I sat pretty much the whole thing out, really. I was watching it with a keen eye, but I wasn't prepared to try and buy any dips on it because I was watching the demise of it, and I didn't know if it was ever going to come back to life again. And then when I finally found some kind of evidence for it to move back up again, I bought in. Not the absolute low, but close to it, but not the absolute low. And this is something to take away if you're looking for gains, right? Obviously buying dips is great in a bull market. We've been buying dips on the way down, didn't really work out, so we stopped all of that really, and we did plenty of trades. And trading is going to be great in any market. You can always handle trades, but I would rather sit this portion of the market out really, maybe for the next 2 months or so. If trades materialize, then they materialize, but if they don't, I will just wait and see. So we've got a bit of a hopium trend line here. This is basically a long-term trend line over a log scale, which is, I don't really like doing them on log scales. It's a bit of a hopium trend line, and that basically points to a low of around about 18,000, which would be front-running this 17,000 area wick. That would show high demand, and if we did bottom around there and start to move up from there, I'd expect a decent rally, like a very, very, very aggressive rally at that point there, because that would show demand coming in way before all the Doom boys have marked off on these on this chart, including me. You have to mark them out. If you don't, what are you doing? If you don't anticipate all directions, then you're just going to get caught off guard, and you won't have a plan. You've got to make a plan for everything. So yeah, it is a hopium trend line, and you can see the relevance of it on these wicks, bounce, and then the March crash bounce as well. So, but again, it's a log scale, so I take it with a pinch of salt. Really, I'm not a big fan of doing it on log scales, especially over such a long period of time. But it is there, so that would probably cause an enormous rally, and that could form the absolute bottom. Or it would just be a very decent bottom in the short-term timeframes that could catapult us back up to 30, maybe even 40. But that's, again, it's a hopium trend line is what I'd like to call it. Now, we talk about September. Between September and December, basically, the low should be in by that point. The reason we get to that, and again, we've talked about this in the past, we look at the tops to the bottoms, tops to the bottoms, tops to the bottoms on the previous bull market end, bear market end, bull market end, bear market end, blah, blah, blah. And we think about this from the peak to the low, and we look at the time frames, and it's all in keeping with the 4-year market cycle and stuff. So we got 85, almost 86% over a 426-day period. This one basically it was a little less as far as time is concerned. 365, 84%. Over basically a full year, basically. And if we measure this peak over here to wherever it is that we could be going down to, that's 72 over a 300-day period. If we move it over to the next month, then we've got 364. If we measure this down a little further, if we want to go down into those 80s, the 84, that does take us down to 12,000. So we think about time is what we're talking about here, rather than sort of percents. Time-wise, we recognise that this is longer than this, and maybe this will be longer than this. So we've got 420, we've got 365. We could be looking at something along the lines of maybe 330 or something. So that takes us this month into next month, really. But really anywhere between now and December, the low should be in, and we should be starting a new bull market at that point, or at least accumulating, getting ready for a new bull market. The only problem is all the other things that are going on outside of Bitcoin's chart, which is basically, every other chart that's going down in a bear market. So it's completely correlated with the whole overall market, but it's still this is just thinking about that 4-year market cycle, to which is still in keeping. We've got halvings, and the peaks and the lows take place in the middle between these halvings. So on the flip side of that, again, just on the flip side, we do have that bearish divergence on the monthly, and you could argue that that's already playing out as we've sliced straight through certain areas of the weekly supports that have never been done before. So 200 weekly never got broken in the past. I mean, you saw little bits down below it, but if you think about bear market ends, you accumulate at the bottom and ride it all the way back up. Bear market end, accumulate at the bottom, ride it all up. And this time we've sliced right through it. So it's definitely different. It's come down. It's not that it's come down by more of a percent. It's still very much fine when it comes to the percent wise. We're still better off in this bear market. If for Matt Damon and all the others who bought the top, you're still better off at this very moment in time than we were in the last bear markets. But as far as time and cycle and differences are concerned, it's still the same. We've got because we're below this area, we have to think about it in a different way, which is horizontal time frames, really, and I suppose percents you can start to factor in on that one. Horizontals, we've got this area which is roughly about between 14 and 15,000, so we call it 14,500 is what we call it, and that would be, if we break down below this trend line on the log scale, then that is probably where we'll come down to find a very decent area of support. It might not be the bottom, but it'll be a decent area of support, maybe having a range around there, and if that breaks, then a very low decent area of around about 12,000, which is marked off on a horizontal time frame here. So you can see all of that. So what do we look for then? Let's have a think about some of the things that we look for outside of just speculating as to where lows will be. So this is Bitcoin on the weekly on the Binance chart here. This is just a simple RSI. We can see a very aggressive form of downtrend, so lower lows, lower highs, and what we'd be thinking on this one is that, just like anything else, we'd be looking for this to break. We just want it to break, okay, and that would be a breakout of momentum on a weekly from a low area, and if we can form some bullish divergence on this as well. This would require a new low to be formed. So again, the low on Bitcoin so far was what, 17,000, almost 18,000, so we just call it, it's got to be lower than 17,800 or so to form a low, and then what we would see would be a drive of bullish divergence on a weekly. If that forms a breakout on this RSI as well, then that would be good. We've also currently looking like we want to form bullish divergence on a weekly money flow index, and if we go back in time, we can see how this has always formed two drives and the end, so a drive started here on a low, a higher low here on the absolute bottom, and then basically moved up, a low here and a higher low here on the absolute bottom, and then moved all the way up. So it looks like, this is something we've been looking at every time we make a low. It would be pretty unreasonable to imagine a new low form, but you just don't know how these things will play. If we do get bullish divergence on the weekly, we get a breakout on the weekly RSI as well, and we come down to some of those levels that we've marked off all at the same time, that might be a buy the dip opportunity potentially if you're looking to get clever, or it just might show us signs of life going into what could be another new bull market beginning some point at the end of this year into next year and thereafter. So, I mean, just to put it out there, I mean, these are some of the things that you want to be thinking about. Now, the reason I think that we're probably going to go lower, like I said yesterday, is that obviously we're below all major moving averages. We've also got a short signal generated on the Ichimoku cloud on the daily, which is yet to play out. So I'll be looking for this to actually, form a new low, which would then, it would give us hopefully the bullish divergence on that weekly money flow index and on the RSI, all on the weekly, to hopefully some of those lows that we've marked off, whether it's the hopium trend line, which is about 18,000, that wouldn't really work unless we sort of wicked down lower than this and then closed up higher. I would be looking for this to probably come down lower to 15, 14, $13,000 area. So yeah, there's things to look for, but the short signal is still in play. It was only generated a few days ago. It was on a daily, so we should really give it up to a couple of weeks to play. It doesn't have to play out, but I mean, with the direction of the trend at the moment and everything else, I would expect it would play out. And the way that you'd measure this isn't so much on a form of a trend. This isn't a trend continuation. This is a simple dump signal. You look for it for the supports to be on previous areas of support. It's as simple as that. It goes down to the next area of significance into the next range. So I'm all for this just continuing to go down, which is why I'm sitting this portion of the market out. Not looking to get clever. I'm just basically doing my thing and allowing for it to work out. And then when it comes to it, I'll probably be focused mostly on some of these bigger altcoins. The ones that I can stake, the ones that have decent teams and blockchains surrounding them. They're the ones that we'll be buying in at the lows if Bitcoin actually forms some lows. They're the ones that we're doing. Just like I stated in the videos over the weekend about planning for a bull market, what you're going to do. Probably buying and hodling and staking is probably going to be one of the best strategies you can come up with at these particular low levels over a 2-3 year period, which is exactly the targets that you'll be looking for. sure. In keeping with the 4-year market cycle, I'm pretty sure that some altcoins, the big ones, the ones that have utility and teams and regulation all behind them, they're the ones that you should be thinking about, rather than the piles of shit that you see floating around Telegram groups. Don't miss out on the furry-faced Shiba Inu penguin coin, or whatever it is. Elon rocket dust to the moon man coin token. Don't bother with any of that. Just keep it simple, all right? We're talking 10, 20, 50, maybe even 100x's over a 3-year period, including the staking rewards that you'll be getting on these platforms that I showed over the weekend. So don't fall for fast gains, low liquidity. Don't fall for any of that. Go for tangible, solid, decent stuff supported on major platforms for staking. Don't go for the piles of shit. Although, of course, a pile of shit can work out extremely well. We've seen that in the last bull market, but for the most part, let's not bother with any of that. So, like I say, we're speculating on lows. We're looking for signals of divergences. We recognized horizontals, but we also expect further downside. So let's just keep it simple. Let's sit back, watch and wait. September being a notorious month for crypto. So let's not get too clever. If we do plummet down to 12,000 or so, maybe it might be worth a little gamble on some of these coins that we've been wanting and waiting to see significant lows, including Bitcoin, because that from a measured move perspective, that would be from the top to the bottom, roughly around the same sort of percentage loss as the previous bear markets. So that would be in keeping. Plus, it's backed up by a horizontal, and that would more or less wipe the floor with well, I suppose that should be it for shorts. Anyone who's trying to short at that level would most likely get slapped so hard in the face. But yeah, we could be looking at some range plays until we reach that level, and if trades materialize, they do materialize, but for the moment everything points down and further down, so we should just allow for it to go down. But we are, in my opinion, approaching the end of a bear market. And the end of all the last bear markets have ended with a very large dump, a very fast one, and then a small period of accumulation before it's time to go up. So we don't need to get too clever. Yeah, we don't need to get too clever. Right, so I'm going to leave it with you there. I'm going to start making some videos about altcoins that I like. Probably all the way through this period of bear market, and talk about why I want them and what I'll be looking for from them and where I'm going to stake them, which is, from what I can see now, it'll be basically crypto.com and SwissBorg. They seem to have won. I've been looking at it over the last couple of weeks, and they seem to be the best options for me as a simple person, really. But if there's things that you want me to look at, just let me have a look, because I don't explore every single coin in the world. I stick to what I know. Very rarely venture out of my comfort zone. So if there's things that you want me to look at, I'm very happy to look at them, provided they're not a pile of shit. If they've got a picture of some kind of animal on I'm not going to look at that. Right, I'm going to leave it with you there, guys. Thank you for watching. Hope you have a nice day, and take it easy.